Now, I've mentioned this guy before. This is what I would call an expert, not some mainstream bozo claiming to be an expert, listening and reading crap out of his ear, essentially, and pretending like he's the hot shot. He's just essentially reading a script, or he's got his little teleprompter telling him, what to say. This is what I call an expert. I've mentioned this guy a few times in some of my videos. Stanley Druckenmiller. This is the most unsustainable situation I have seen in my career, he says. I read this from Zero Hedge, posted by Jody Chudley, originally posted on the Daily Reckoning. Simple math shows America is headed for an economic disaster. With so many voices streaming at us through our televisions and computers, a person can't be blamed for tuning out. For the most part, tuning out is exactly what we should do, but sometimes it is very important that we pay attention. By listening to Jeremy Grantham, Jim Grant, and a host of other investors, a person could have avoided and profited the crashing of the tech bubble in the late 1990s. By listening to Kyle Bass, Michael Burry, and Prem Watsa, an investor could have avoided and even profited from the crashing of the housing bubble in 2008. Today is another time when we all need to be paying attention. This time, the man we need to be paying attention to is Stan Druckenmiller. For 25 years as a hedge fund manager, he compounded money at an annualized rate of return of an unheard of 30%. Incredibly, he did it without a single down year. Druckenmiller has a dire warning for us all, one that requires action. There is nothing for Druckenmiller to gain from providing this warning. He isn't taking his book or trying to gain investor support, or talking his book or trying to gain investor support. He isn't promoting anything. He doesn't even have a political agenda. He is spending his own time and money to try to bring this issue to light because he believes it is crucial for the United States. Druckenmiller simply believes that America is heading for a disaster, and he is trying to use his high-profile position to get people motivated to stop it. What you need to know about Stan is that his incredible investing performance was rooted in his skills in making macroeconomic forecasts. When describing how he was able to compound money at such a crazy rate and not have a single down year, he said, "How did we do it? Very simple. While others were focusing on the present, we looked and focused on the future in terms of analyzing unsustainable situations. And when I look at the current picture of expected tax revenues combined with benefits promised to future generations, this is the most unsustainable situation I have ever seen in my career." 25-year career. The disaster that Druckenmiller sees coming for the U.S. is all about changing demographics and entitlement spending. They don't add up to a sustainable situation. In 1940, entitlement payments, which include everything from disability payments to Social Security to Medicare, amounted to just over 20% of annual government spending in the United States. You want to know what they are today? Feel like the guy in the Priceline commercial. Come on, go. Bigger numbers. Come on, that's not enough. 30%? No, come on, big shot. 40%. Keep going. 50%. Keep going. 60, 65. Keep going. 70. Today, entitlement spending has swelled to nearly 70% of the annual federal budget. Things are about to get a whole lot more complicated. The 20-year baby boom that took place after World War II is now beginning to result in a retiree boom. And I'm going to stop for 1 second because, matter of fact, I'm going to pause this. I want to see if I can find a quick chart. When I first started doing videos, matter of fact, even before that, I remember having conversations with some friends and family, like around 2007 and 8. The baby boomer retirement population is coming in droves. I want to see if I can find something on that real quick, so hang on. All right, I didn't find exactly what I was looking for, but I found close to what I was looking for in some additional, so that's good. And I'm going to break into that for a second. These are very recent articles too, with data pulled recently, as in within a year. Americans say they're focused on saving for retirement, but a look at how much they actually have in their retirement accounts shows just how far they are from their goals. The average baby boomer has a goal of accumulating enough of a nest egg to have $45,500 a year in retirement income, according to a report from BlackRock. The average retirement portfolio, however, has just $136,200 in it, which would provide an average estimated income of $9,129 per year. That would leave the average boomer nearly $37,000 per year short of his or her goal. Problem, huh? Another thing. Ability to pay bills. Which, by the way, the years 1946 to 1964, those groups of people, that's who they actually consider the baby boomers. Ability to pay bills. With inflation rising against the cost of living, it's becoming harder for those living on a fixed income to pay their bills. This is why many people ages 50 to 64 are coming to terms with the prospect of delayed retirement in order to maintain their current standard of living. And wait till the markets crash and the club pulls the trigger on the world economy. Ugh. Being able to afford retirement. Surprise, surprise, according to a survey by AARP, boomers can't even afford to retire. In fact, nearly half of Americans 50 and over have $25,000 or less saved for retirement. This article also suggests that many baby boomers don't have a realistic view of retirement and as a result are not putting in enough effort preparing for it. Working past age 65 has now become an economic necessity. To prepare for this financially stressful decision, many are already thinking ahead by cutting back on expenses or downsizing their homes in order to raise much-needed funds for retirement, blah, blah, blah. Who's going to look out for me? Social Security may not be around for the next generation, even though this generation paid for it. So put it in, I should be getting it back. Oh, no, you spent it already. Oh. So I'm going to stop there. There's a few more points that they had of that on that article, but that's a different one. I just want to make it clear. There's just not going to be some people dealing with this. The baby boomer population is a big chunk of the retiring population. That's why it's important. So he says that the disaster that he sees coming for the U.S. is, and this is back to Druckenmiller, is all about changing demographics and entitlement spending. They don't add up to a sustainable situation. In 1940, we've been through that. Today, entitlement spending is swelled nearly 70% when it used to be 20%. Things are about to get a whole lot more complicated. The 20-year baby boom that took place after World War II is now beginning to result in a retiree boom. For context, Druckenmiller points out that in 2030, the average age of an American citizen will be older than the average age of a resident of Florida today. This demographic trend is going to create an entitlement spending catastrophe. As I read some of this to you, you should be thinking, retirement, gold and silver. Retirement potential, gold and silver. The way the system works, the current workforce provides the tax revenue to support the current senior population. A huge rise in the retiree population relative to the number of people working results in a funding dilemma, we'll call it. Since 1980, the number of working age people the country has outnumbered those age 65 and over by a count of 5 to 1. The country has had enough workers generating tax revenue to support the number of retirees. By 2030, that ratio is going to drop to 2.5 to 1. It was 5 to 1. Okay? It was 5 to 1 all this time. By 2030, the ratio is going to drop to half of that, 2.5 to 1. So let me read that again. Since 1980, the number of working age people the country has outnumbered those aged 65 and over by a count of 5 to 1. Now it's going to be 2.5 to 1. That's just cut it in half. By 2029, there will be 11,000 new seniors arriving every single day and only 2,000 new adults being added to the workforce to pay for them. There is just no way that the workforce at that time is going to be able to fund the entitlements of these senior citizens. This is a problem because those are commitments that have been made and will have to be paid. Or will they? Corporations are required to disclose on their balance sheet the future defined pension obligations that their employees have earned. Those are very real liabilities for companies that are going to have to be paid, so they should be included. The balance sheet of the United States, meanwhile, does not account for the future payments that it has promised to its senior citizens. Again, like defined benefit pension payments, these are very real obligations. We just don't count them right now. They should be recorded as liabilities of the U.S. Here is how much the U.S. debt would increase, assuming no change in tax rates, if those obligations were included. Get ready for this. Bow, bow, bow. Oh my God. I'm going to stop for a second and tell you a little story. I was at the bank the other day. It's rare that I actually even go into my bank, but I was there the other day. And this Indian fellow and I are in line waiting and start chatting a little bit. He's talking about these two or three properties he owns. He's renting out, but they live in one, and talking about the housing market. And I said, yeah, I said, we're renting right now. I'm thinking we're going to try to do this for about 2 years. And I'm pretty certain the housing market's going to be crashing down again. And we want to capitalize on that. So we're going to, hopefully, maybe 2 years, roughly. Oh, you think it's going to do it again? The market's going to go down again? I said, yeah, I mean, nothing changed since 2008. We just compiled more debt. Nothing changed. Oh, yeah. Maybe I should sell my house. I said, well, if it was me, I'd probably sell it right now since the market's not too bad right this minute. And maybe hang on to the cash. Or I said, it wouldn't be a bad idea to buy some precious metals, like gold and silver. Precious metals for why? I said, you're Indian, correct? Yeah. I said, I told him this. I said, you need to do what your home country's doing. Your home country is buying precious metals left and right. Oh, yeah, but they're big-time jewelry. I understand that. They always have been. But they ain't buying like they've been buying recently in recent years. They're buying huge amounts of gold and silver. The government is. So he had to go do his thing, and he came back, and I did my thing, and they were still there. I was still chatting with him for a minute. And I said, because he said, one thing good, Obama. I said, one thing he did good. I was able to refinance all of my properties because I was paying on time. And if you pay on time, they said that the bank had to work with you to lower your rates and stuff. So I'd make more money now because I have lower rates. And I didn't say this to him, but I probably should have. I just started talking about something else. But the only reason the government did that, not because Obama was some nice guy, they realized if we don't make this easier for people, we're going to have a massive amount more of defaults. We've got to let them refinance without, anything. Oh, you've been paying on time? Yeah, you're qualified. You can get a lower rate because we don't want you to stop paying. That was the reason why. But I said, look, math doesn't lie, correct? 2 + 2 is 4, 5 + 5 is 10, right? Yeah. I said, okay, just bear with me. Our country, because he said, even other countries, man, he says this to me, the USA, man, I think it's still number one. This country is really good. I said, I agree. But I think it used to be a lot better. It's starting to go not so good. Oh, no, I don't think so. I think it's still okay. I said, well, our country was founded, right? We had 1776, Declaration of Independence. I said, let's just 1780 to 1980. It's 200 years, right? Yeah. It took us 200 years to get $1 trillion in debt. Okay? All right. From 1980 to 2000, 20 years. $3 trillion, etc. Bush takes office, $6 trillion. He leaves office, it's up to $9 trillion. Obama takes office. He's in there for also 2 terms, 8 years, and now he's doubled what that debt was. So Bush can take $3 trillion, turn it to $6 trillion, then the $9 trillion or whatever it was. I said, then you take the $9 trillion, it's $19 trillion, so it's more than double. He still isn't out of office yet. He's still got a whole year left. I said, so let me bear with me, right? 200 years, this long, $1 trillion of debt. 20 years, a lot smaller of a space. 3 trillion turns to 6 trillion. 6 trillion turns to 9 trillion. And then Obama takes office, and 9 trillion turns to 19 trillion in that amount of time. I said, so can you see where this is going? I said, so just bear with me. One more thing I said to him. Let's just assume, because you can see the spending gets worse and worse, right? It keeps going, doubling and faster and faster and faster, right? Yeah, I see that. I said, okay. Let's just pretend that our government fixes a whole bunch of problems and spending and stuff, and that whatever we did for the last 8 years, it just stays that way. Doesn't get any worse. It just stays the same. Okay. $19 trillion turns to $38 trillion in 8 years. Oh, yeah. Yeah, you're right. I said, so we've never dealt with this in our country. It has to be dealt with. I mean, right? It can't just be there and pretend it's not, right? Yeah. So it has to be dealt with. When it gets dealt with, we have to look back at history. What happens? What does history show us? I said, the whole world is using paper money. It's backed by nothing. No gold, no nothing. And the whole world's following that practice now. But now China, Russia, India, your country, they're buying gold and silver very much, a lot of it. History tells us gold and silver is money and it will protect you. So you just think about that. You may want to take some of that money if you sell your house. At the same time, you might just sit back on it and wait for the housing to crash and then go buy 2 houses since you sold one. So, what's your name, man? What's your name? My name is Joe. My name is Joe. Pleasure to meet you. I got to run. Take care. And that's how that conversation went. So if you don't mind, I'll finish this video. I just got a couple paragraphs. But I wanted to share that with you. Because that was an average person. I had no idea who he was. We were chatting in the bank. And he had no clue. He was in the mindset, USA. I'm an Indian. I came over here. This is great. That's what we used to be. That's what we were about. But we ain't anymore. It's going down the tubes. And a man like Donald Trump is trying desperately to stop it right now. This is the chance. It's the only chance. I said it once. I'll say it again. If he doesn't win, it's over. It's finished. And I hate to tell you this. But I'm a realist. History says he ain't gonna win. Because if everything happens in a cycle, including major civil unrest, rioting, overthrowing governments, happens like clockwork, Mr. Trump can't come in and stop that cycle. As much as I'd love for him to do so, because he could, ain't gonna happen. Because what's he gonna do in office that deals with that 19 trillion that in 8 years will be at least 38 trillion, if not more, because the trend is way up, probably 45, 50 trillion, and the unfunded liabilities, and the 5-to-1 baby boomers versus the working people, that becomes 2.5-to-1. How does Mr. Trump deal with that? How does any Trump president deal with that? They don't. It's like Lindsey Williams said a long time ago. I think I got this from him. A train is going down a predetermined set of tracks. Every 4 years, it's time to vote for a new conductor. Sometimes they last 8 years. But they jump out and a new one comes in. But you got to look back and say, well, hold on. He's in a train that's going down a path that he can't stop. And ultimately, it leads to a big giant cliff it's going to fall off of, but no one wants to talk about that. So who's in the train when it goes over the cliff? Does it matter if it's Donald Trump? Does it matter if it was Ron Paul? Does it matter if it's Hillary? I hate to say it, but it doesn't matter. It's not going to be pretty. So, that chart makes the size of the problem abundantly clear. There are a lot of people already very concerned with the amount of debt the U.S. has. Imagine how they would feel if they were aware that with these liabilities conclude, the number is 20 times larger. This is a case of simple math, just like I told my Indian friend Joe. Joe, you understand, math is math, right? Math doesn't lie. 2 plus 2. Yeah, I understand. Good. Either tax rates increase in a massive way, or the payments to seniors have to be cut significantly. The status quo doesn't work. There just isn't going to be anywhere close to enough money coming in to fund the payments going out. The country can't borrow its way out of a funding issue of this size. This issue that Druckenmiller is so passionate about is a huge problem, one with no possible solution that will be popular with the American voters. Either higher taxes or lower benefits. And by the way, I'm going to rewrite that sentence because this is the truth. Either much higher taxes or significantly lower benefits. Likely some combination of both. Both very unattractive options for big percentages of the voter base. You can hear the politicians kicking this can further down the road, can't you? Fixing this is going to require some real sacrifice by the American people. That doesn't sound like a very appealing platform upon which to get reelected, now does it? I'm again going to refer to Lindsey Williams. A few years ago when he said, when this economic system goes down, when they actually pull the trigger, and it goes, and you see what happens to America, the lifestyles you enjoy right now, you will never have again, is what he said. I mentioned this the other day. You will never have it again. And he said, once we start repairing America to try to make it something better than it has become, it will never, ever, ever, ever even come close to what it used to be. For the simple reason that all the goodies you had is simply you riding the coattails of what this New Age Roman Empire system was. Strong dollar, world reserve currency, oil for dollars, that's going away. And when that goes away, your lifestyle is going with it. Okay? He said, you'll get some of your little stuff back, but you ain't getting back what you had and what you have right now. This is exactly what this man has just said in a couple sentences. Fixing this is going to require some real sacrifice by the American people. That doesn't sound like a very appealing platform upon which to get reelected. He would be right. The finances of the entire world are run by short-term thinkers. Central bankers have been dead set on trying to inflate economies for a decade now, using more and more aggressive easy money policies. To try to make the short term a little better, these central bankers have been perfectly willing to roll the dice on the long term. The issue that Druckenmiller has raised will have to be dealt with. I'm sure it will be dealt with far later than it should be, as politicians do kick that can down the road. By doing that, they are only going to make the corrective actions that the country has to take more severe. It is crucial that all of us realize that our long-term financial well-being really needs to be taken care of by one person. That one person is the man or woman you look at in the mirror in the morning when you are brushing your teeth. We have to make sure we protect our wealth diligently and invest in assets that will retain their value when the consequences of all this short-term thinking arrive. Because eventually they will. This is a very, very important video I feel I've just done. I hope a lot of people watch this one. I hope you send it to some people who hopefully may waken them up if they were kind of starting to maybe look at things a little bit differently. Matter of fact, even if they're not and they're in complete sheeple mode, you still may want to send it to them, because I don't think even they can argue with what I just said. Nobody can. You can't argue math, right? Take care.